Dustin, what did you think of the interview with RJ yesterday? Now that you've slept on it?
I thought it was good. I was gonna start this more casual. I was gonna be like, "So you do anything fun this week?" No, I
Well,
thought
you
it
know,
was a
one
great
thing
interview.
after the interview, I saw an article that had a quote from me, and apparently I used the word like way, way, way too much. In the quote, it was like, and I even used like right now. So you got to stop me from using the word like from this point forward. I'm like a
Uh,
teenage girl over here
you are a
using the
teenage girl,
word.
totally.
Yeah, basically, I want to have the enthusiasm of a teenage girl, and
It's
but
really funny.
but yeah, it was not flattering reading my own quote. So I'm going to be very careful with my words from
Well, at
now
least you
on.
were quoted.
Well, you had so much to say that you just didn't know which part of
Right,
what you said
exactly,
to quote,
exactly.
But
And for those of you who don't know what we're talking about, we were fortunate enough to have an interview with RJ Scaringe yesterday, CEO and founder of Rivian. So if you're interested in checking that out, don't stop this video. Finish watching this, and then when you're done,
cue
go
that
and
up.
watch the interview.
Yeah, I thought it was a great interview, and we got some great comments about it as well, that people love the questions. In some cases, we put RJ on the hot seat, so, that's not commonly done in interviews, but despite being fans, we wanna make sure that we're asking the tough questions, so,
Right.
hopefully that's an encouraging sign for people. But we have a lot to cover today, so let's, jump into it. What's on the agenda? Where should we
So
start?
I made some moves in my portfolio. We're going to talk about OpenAI acquiring OpenClaw. There's this new Meta and AMD partnership deal. That's a little interesting if you ask me, but we'll get to it. We have earnings, of course. NVIDIA's reporting any minute now, I
Okay.
think, right? Yeah.
Yeah.
Uh, and of course, as always, listener questions. So if you have any questions for us, drop them down in the chat. Okay, let's start with my portfolio. I
Let's do
made
it.
two moves since last week. The first one is I sold my Tesla position completely,
Ooh,
fully
100%
exited
sale.
Tesla. 100%
Okay.
sale.
What's the reason for that?
So there's a few reasons, and let me show the chart here. You can see I bought Tesla roughly 2 years ago when it was down over here in the like 170s, 180s, and
Okay.
now sold around 400. Uh, so first reason is I wanted to increase my cash position as the market is still a little bit uneasy. And this kind of goes back to a question we actually had from a listener maybe like 2 weeks ago when they were asking like it was something along the lines of like my portfolio doesn't really have much cash in it right now. What should I do? And I didn't give this as an answer because I thought of it after the fact, but like one thing I like to do is I always kind of know in my portfolio which position is the weakest link. Not that it's a
Mm,
bad position, because if I didn't believe in it, I wouldn't own it, but just like maybe where my conviction isn't as strong or where I see some cracks. And for me, that was Tesla, where it was kind of first on the chopping block. And the
okay.
reason being, first off, its PE is just a little too rich for me to be comfortable, where it's trading like 240 times earnings, I think over 240 times earnings.
Yes.
And then that goes against my reason for holding it, or one of my reasons for holding it, which is, as you know, I like to own several Mag 7 stocks because those in theory are less risky than the other things I'm holding. They're still risky,
Right.
right? But
Right.
it's less risky than the EOSs and IRONs and all of that.
But Tesla might
But
be the most risky Mag 7.
exactly. So it
Yeah.
it kind of goes against the core thesis of why I'm even looking at it to be in my portfolio. So it just didn't make sense if I wanted to increase cash, which I did.
Okay.
So with that sale, I most of it is still in cash, but I did buy a little bit more EOS, where I think I increased that position roughly 30%, 33%, something like that. Yeah,
That's the energy company,
32.9%.
right?
Yeah, it's the battery company. Yeah, so they make like large scale batteries. Their earnings is actually tomorrow. So
Okay.
we'll see if this was a good move or a bad move.
Well, from a timing perspective, I mean,
Right.
that's not a big deal, even if it sort of, as long as you believe in them long term, because, and I suspect that's the viewpoint.
Yes. Yeah,
So,
that's the viewpoint. It's just, like obviously earnings could be very rocky, sometimes very good, sometimes very bad.
right.
But I thought basically they dropped down to around $10 a share, and I thought that was a very fair price. So I wanted to buy in. And since buying, and let me see when I made this purchase. 2 days ago. So since then, the stock price is actually back up to $11.17 after hours. So it's
Okay.
basically up $1 a share since I bought it at $10.13.
So
So
he also, go back to the top. What's the earnings hub score on this thing?
D, a
Three, no,
proud
but
D.
just like I meant the details in the box, which is
Oh,
$3.6 billion market cap, 63 million revenue, growing rapidly, 325%. That's pretty amazing growth. What's there? Can you switch to the earnings tab and scroll down a little bit? Okay, look at that earnings growth. And like, what's the expectation for next quarter or this quarter that they're reporting on tomorrow?
for tomorrow. Oh, I'm in
Oh,
Savvy Trader,
are
so
we
it
not
doesn't show
showing it?
that, but 92.5 million, where last quarter was 30 million.
Just 40. Oh, wow. Double over quarter. That's pretty rapid growth. This is a pretty, I mean,
Yeah, but I will say I'm
assuming they can,
expecting I think they're
go
going
ahead.
to miss expectations. That's what they've done historically. I think
Okay.
it's their revenue should grow from this $30 million number, but I don't think it's gonna hit this $92 million target.
Gotcha. But even if it's like 60 or 70, doubling
Right,
quarter over quarter is pretty impressive. I mean, it's not cheap. It's a rich valuation, but still, the potential in this industry is so enormous that if they could sustain pretty rapid growth over the next couple of years, all of a sudden they would be massive, um,
right, and I think
massive.
they're at this inflection point of, like, really getting the packaging of the product down, which we talked about a couple weeks ago, where the batteries themselves they made a lot smaller. So this whole system is like easier to install, way more modular. Um, and they're just kind of like ramping that up, which you're starting to see in their revenue chart, where it was like,
Right.
up and down for a good amount of its history and just starting to kind of shoot up. So
Makes
we'll
sense.
see. Yeah, so those were the moves I made. Also,
Very cool.
obviously I'm best friends with RJ now. There's no way I'm holding a
Of course.
competitor's shares. Friends don't do that to other friends.
No, you can't be best friends because then you can't do legit interviews. See, we like RJ, but still, we got to make
Yes,
sure.
yes, we're still objective.
But yeah, that was fun. Hopefully, we'll do
Yeah,
more of those interviews uh,
I
as
hope
uh,
so.
as as time goes by. Um, Moving on to speaking of energy, by the way, this deal between AMD and Meta is super
Yeah.
interesting, and it's all around 6 to 10 gigawatts of additional data center energy and data centers and chip purchases and all that. You want to summarize that deal real quick, and then let's talk about it.
Yeah, so basically Meta committed to spending 60 to $100 billion over the next 5 years to deploy 6 gigawatts of AI compute and buy AMD chips. And then the most interesting element to me is the sweetener part, where if Meta executes and AMD stock price hits certain targets, Meta can earn up to a 10% stake in AMD, 160 million shares.
This is the part that is absolutely mind-blowing to me because the 160 million shares is based on if AMD shares hit a certain target, which is like $600 a share or something
$600,
like that.
yeah.
So if that were to happen, and if I understand this deal correctly, everything we've seen on it, and I don't know if these are sort of like detailed official documents released by Meta or AMD, but the summarizations that we have found, says that Meta will have the opportunity to get these shares at a penny a piece if it hits $600 a share. So basically free, but these are in the style of warrants. But 160 million shares times $600 a piece is worth almost $100 billion. So the deal is that spend between 60 and $100 billion with us over the next 5 years for these chips that you need anyway, and we'll give you almost $100 billion worth of our company for free. So this is the ultimate founder negotiated deal. Like, how smart is Mark Zuckerberg to have been able to negotiate this deal? And I was wondering, like, how could this deal have come about? Like, why would anybody give up 10% of their company, or roughly about the same amount of revenue that they would get from this one customer? And then we saw an additional detail that said that roughly 40% of AMD's current GPU sales are to Meta. So if they lose this one customer and Meta decides to go to NVIDIA, AMD is toast, right? So they
Yep.
basically have AMD in a chokehold and saying, "Hey, you know what? We'd like to own 10% of you, but we'll buy some more chips from you." I mean, is this how you see this deal, or like what are your thoughts about it?
Yeah, I mean, obviously, this seems to be a fantastic deal for Meta. If I'm AMD, it's a question of like, why am I doing this? It's either you don't want to lose Meta, or you really believe in Meta's vision, or both. But it's
But even if
probably
you
the
believe
former
in
rather
Meta's
than the
vision,
later.
why would you give up your own 10% of your own company? I mean, this is a much sweeter deal for Meta than it is for AMD, and essentially that $100 billion worth of purchase ends up being close to free because they'll literally get $100 billion worth of assets put onto their books, into their balance sheet, and it could be worth even more. By the way, if AMD becomes $1,000 a share company, all of a sudden it's a $160 billion asset that Meta got for free. So
Yeah,
absolutely mind blowing. I mean, like, Mark Zuckerberg, go, man! This guy is amazing. I'm glad I own Meta shares, but this deal
and soon
seems
AMD shares
yeah, apparently by proxy.
by
But
proxy.
I
Yeah,
mean, this is obviously good for AMD. Don't get me wrong. They're going to sell $100 billion worth of chips, and it keeps them in the game. It makes sure that it gives them legitimacy that Meta, one of the biggest AI players, is using their chips, and therefore they can sell those chips to other uh, uh, customers as well. But holy macro, what an amazing deal! What a sweetheart deal this is for for Meta. Um, phenomenal
yeah.
deal
And
negotiation.
to be clear, specifically for our listeners, like it's not a guarantee that Meta will receive 10% stake in AMD. There's several tranches that need to be hit. The first tranche, I believe, starts with the first gigawatt being either like shipped or deployed. Um, so it's not a foregone conclusion that this will happen, but if everything goes right, then Meta will be rewarded up to 10%
Right.
stake.
So
Okay.
related to this, by the way, so OpenAI just hired what is his name?
Peter something? Yeah.
Peter Steinberger, who's the creator of OpenClaw. And this guy is super fascinating, by the way. I listened to a Lex interview of him, of Peter Steinberger, and this is like a 3 hour long interview, fantastic interview. OpenClaw has sort of like taken everything by storm in the AI world, where people are setting up OpenClaw to be their personal assistant, using a bunch of different possible AI agents, if you will. To do various different tasks and automate, even like looking through your email. You basically give OpenClaw access to everything on your machine, which is highly risky. Be careful if you're considering it, but then it can be a very useful assistant. And one of the things people are sometimes doing is running OpenClaw in these isolated machines that they had sitting around, or maybe buying a MacBook or a Mac
Mini.
Mini, a cheap Mac Mini to run it on. You can also like run it in a virtual PC in the cloud, but then it calls these agents to do various different work. But in this interview, and OpenAI, by the way, just decided to hire Peter Steinberger to bring his work under the nonprofit portion of OpenAI under the foundation. So OpenClaw will continue to be free and open source and available to users. Before I go on to the interesting parts and how this connects to Meta, let me like pause there and you know you help summarize anything I missed there with respect to this deal.
I don't think you missed anything from my perspective. I just don't know if this is going to benefit OpenAI all that much, to be honest.
Yeah.
Like I'm
So I
just
mean,
skeptical.
part of it is just the talent acquisition thing, right? So in this interview with Lex Friedman, Peter talks about how all the companies are coming at him, trying to hire him, right? And it becomes pretty clear that in the interview, it's down to what when he's having this interview discussion with Lex Friedman, it's down to OpenAI and Meta. And he gives this sort of like a little bit of inside baseball story about how the way Meta came on the scene is that Mark and Nat WhatsApped him, like sent him a message on WhatsApp that they started using OpenClaw, and they started giving him in this group sort of text, telling him like, "This is awesome. This feature is cool. This feature is not. Like, this is stupid." And they're basically having these conversations with Peter about how to improve his product, and he's just absolutely loving it and enamored that the CEO of the world's one of the world's largest companies is actually using his product. So finally it comes down to like Mark saying, "You want to just hop on a phone call and talk?" And he says, "Sure, let's do it." And Mark says, "Give me 10 minutes. I need to just finish up some code that I'm working on." And Peter is just blown away that like Mark is still writing code. And this goes to sort of show you what a highly technical founder CEO is capable of. And the Nat guy that he also mentions in this sort of story is the former CEO uh, of GitHub, by the way, who is brilliant. I've met Nat. He when I was when I was running GitKraken, my other company that we sold. Um, Obviously, we were partners of GitHub, and Nat was the CEO at the time. So Nat is a very, very smart guy, and he was hired by Mark Zuckerberg recently as someone to run uh, Meta's AI division. So the fact that Meta and Nat and Mark Zuckerberg are so closely and intimately involved in all the little details tells me Meta is cooking up something very, very big. Now, I don't know why Peter chose OpenAI as opposed to Meta. I suspect it has to do with OpenAI's nonprofit arm, which is probably the largest nonprofit in the world, or will be soon if it's not already. Um, and being able to keep OpenClaw in the nonprofit world as opposed to trying to commercialize it, which Meta might have less of an infrastructure for keeping things on the open source side and free, as opposed to what Sam Altman may have been able to offer him there. So
I don't know, but
super fascinating.
their initial models are open source, so they definitely
Yes,
have
but they
the
kind of
space.
stopped working on that. It seems like
Yeah,
Meta stopped working on Llama and has not released anything for some time. So I am kind of curious as to what Meta might release over the coming months.
totally.
Um, Super excited about that.
Yeah,
But
I would.
yeah, go ahead.
I was just gonna say, like, in my experience, so like I was, I think like all of us, really enamored with ChatGPT when it was first released,
Right.
and for like several years after, because they were just number one top dog.
Yeah.
Um, but I feel like they've really taken a step back, at least in my personal experience. The winds have definitely changed, and I've said before, like, I've been using Gemini a lot more. Really, the only thing keeping me, uh, on ChatGPT is their Mac app, because it's
Right.
so easy to just call it up, but you do, Option
Yeah.
space, the keyboard shortcut, and it's just, like, right there. If Gemini had that, I'd fully switch over. So, I don't I don't know, I feel like we're in this moment where the other models, Meta included, could start to surpass OpenAI.
Yeah, that's quite possible. And the type of moves that Meta is making it very, very interesting. Um, I'm kind of excited about that. So anyway, this OpenAI, I feel like it was a pretty good get for them to hire Peter because there is a lot of clout and um, I don't know, mind share that they get from the AI from that particular hire in the AI community because OpenClaw just became so big so quickly that that hire probably brings with it tens, if not hundreds, of other potential hires of people who want to go work with this guy and possibly work on OpenClaw related things. So I think it's a good hire. It's a good move on OpenAI's part. I don't know why he chose OpenAI over Meta, but it was some fascinating inside ball in that interview.
So would you say the more valuable piece of this deal is that they acquired Peter and not OpenClaw?
Oh yeah, for sure. And technically, OpenClaw is open source, so you can't really acquire it. So it's 100% about Peter.
Right.
Yeah,
Okay, let's move
and
on. Yeah,
his focus is going to be on OpenClaw, by the way, just even at OpenAI. So, but yeah, let's move on.
let's move on to earnings. So let's see.
Let's do
I
it.
want to. Do you want to start with this afternoon's earnings? I don't know if they're out yet, but
Yeah,
they're starting to roll
NVIDIA.
out.
What happened with NVIDIA?
Well, let's see. We might not have it yet because they report at 4:20. It's 4:21
Oh,
Eastern.
okay. Okay. What about CRM? Yeah.
Salesforce we have. So it seems like double beat for Salesforce. Revenue,
Ooh,
they
okay.
beat by 0.18%. It was $11.2 billion revenue report. And EPS, they beat by over 40%. EPS, $3.81.
That's a
And
huge beat on EPS. What's their stock doing after hours?
they
Down
are down
4%.
a little over 4% after hours.
Nobody likes SaaS right now. And CRM is the poster boy for SaaS, which is kind of interesting. The stock is becoming extremely cheap, though. Look at that.
Yeah,
Look at that
that's the
PE
1 year
ratio.
chart.
Yeah.
P ratio is 15.
That's pretty incredible. It has an earnings hub score of A, down 37% in the past 1 year.
Yeah.
So Salesforce.com, which is one of the first SaaS companies, has lost more than 40% if you go back a little bit more than 1 year, right? More than 40% of its value, despite having continued growth and profits, and it's a very profitable company. It's
Yeah, I
its
mean,
price
the
earnings
high was
ratio is only 15.
$350.
It's pretty incredible.
Yeah,
Yeah.
so it just shows the weakness of the market.
Yeah. But
Is it
specifically on SaaS companies, which have gotten hit the hardest.
do
What
you
else? No.
well, wait, just one follow-up. Do you think that this type of correction is called for, or do you think it's overblown?
The market only does overreaction. It never does appropriate levels of reaction.
Mm.
So I suspect not only is it overblown, but it might get worse before it gets better for them.
Right.
So it's just the way that the market operates. It has bipolar disorder, and once it decides it's going to go in the negative direction on something, it will just completely crush a company, a sector, whatever, much further than it should really go. But you know, at some point the results will come back and matter because if it doesn't turn around, then Salesforce will start buying its own shares, and that will cause the stock price to recover. And they may have even announced a buyback. I don't know, or they might announce one today. It'll be interesting to see.
Yeah. Okay, so this is Snowflake. They had a really big beat for EPS, 440% beat. They were expecting an EPS of negative 10 cents, and it ended up being positive 34 cents. And then revenue was a smaller beat of 2.5%. Revenue was reported to be $1.28 billion. And let's see, they're also down almost 3% after hours, but they were up over 5% earlier today. So net
Yeah.
positive.
This this company is still operating in growth mode, so it doesn't have a great PE ratio, for example, because it's not yet very profitable. Um, but that revenue growth looks really fantastic, 29%.
Yeah, look at that chart.
And yeah, and the chart is beautiful. The revenue chart is just up and to the right, every single quarter being a record quarter, basically.
Let me see if we have
NVIDIA.
NVIDIA yet. Not yet.
Hmm.
I did want to talk about HIMS, which reported on Monday. So I don't know if you realize this. HIMS, in terms of popularity on Earnings Hub, is number 6.
Oh,
It's
wow.
really popular on Earnings Hub. Here, let me zoom in for the proof. There you
Yeah,
go. Number
ranked
6.
number 6.
Um, they're they beat EPS 166%. They were expecting 3 cents EPS. It ended up being 8 cents. And revenue was a small miss of 0.03%. Revenue ended up being uh, roughly 618 million, which was what was expected. HIMS as a company, and I haven't looked into them too much, but to me, they've always felt like more of a marketing company than anything
Right.
else. Because a lot of the drugs that they're selling are just white labeled, like they're not the ones making it. And then
I
on
thought they were
on
selling generics kind of, but yeah.
they do, um, but they also like white labeled the generic, so it's like HIMS branded,
Mm. Right, right,
um,
right.
or
Makes sense.
they're yeah. And on top of that, I don't know if you heard anything about this. So Wegovy announced and started selling a GLP-1 pill, so you don't have to inject it. You just,
Mm.
take it like any other drug. And Hims ended up announcing a very similar GLP-1 pill of their own.
Okay.
And then Novo Nordisk, which is the owner of Wegovy, sued them.
Oh, okay,
So
I don't know about this.
yeah, so that now they're in like a bunch of legal trouble for trying to sell basically what they're claiming is a knockoff version of their own drug.
Mm.
Um, so and this is a stock that has been very popular on Earnings Hub and Savvy Trader. Like I see it everywhere, and it
Yeah.
just never really clicked for me. And
Well,
I
it's a
understand like
sector. Yeah, I had
yeah,
looked at them for about a year ago, and it's in a sector that, like, I don't really follow, which is the healthcare, but because the stock had been ripping at the time, and continued to just have record quarter after quarter of growth. That revenue chart was pretty fantastic. But when I looked into it and I was like, okay, let me see if I can try their products. Everything requires a prescription, but the way in which you go about it is you just call them up and get a prescription from their doctors, essentially, or their network of
yes,
doctors. And there was something that felt just slightly off about that. And it just didn't settle well with me. And I was like, okay, I don't know this sector. And it seems like, writing prescriptions for your own products by a network of independent doctors just might not be so independent. And I was, and it's sort of telemedicine style, meaning you just give them a call, they write you the prescription, you get it
right. And
filled
there's
on HIMS.
incentive to yeah, there's incentive for them to approve the prescription because they want to sell you the product.
Right, exactly. And the reason the doctor is getting that referral is because the expectation is there. So like there just seems, I'm not insinuating anything. I'm just saying something about the whole process just felt slightly off. And I may have misunderstood it. I didn't look at it in detail, but I stayed away from the company as a result. But
Yeah,
um,
and I think also like if you wanted to acquire one of these drugs, like Hims, I believe their prices are not competitive. Like you're paying a premium
hmm,
for the better user experience and for the nicer marketing, which
right.
for some
They
people
also
that
make it easier to obtain, right? Because of
right,
the, prescription right there, as opposed
right.
to having to make an appointment with your doctor, going in, asking for that drug. But
Yeah. So
Uh,
like there is some value there, I guess, or there definitely is, but I don't know. Drug prices are already very expensive, so I just don't see how this company can succeed if it's not if it's charging higher prices on already expensive drugs.
yeah. All right. What else do we have to talk about?
So I had a question for you. You talk a lot about wanting to invest in founder-led companies, but not all founders are made equally, right? So what do you specifically look for in a founder that you like and that gives you more confidence to invest in their company?
Well, I'm heavily tech focused, and by the time a tech company is public and still run by its founder, the founder is generally pretty impressive and has done really well, and is usually a multi-billionaire by the time the company is public. So oftentimes they're not driven by just money anymore. Now it's a matter of like building the I got to stop using that word building a great, fantastic company long term, right? And and then it becomes, do I like the company's market? Do I like its potential? Do I agree with their strategy? Would I do anything differently if I was running that company? And then if these things sort of align for me, that's when I really like the company. And if it's at a good price, then it becomes a no-brainer investing in it. So that's the perspective I take on it. I don't know
Gotcha.
if that makes sense.
Makes sense to me. Um, I think we're gonna actually wrap up the episode there. Uh, if you haven't already and you missed the beginning, are you gonna say something, Hamid?
Well, no, two shorter episodes this week as opposed to one longer
Right.
one.
Exactly, exactly. Yeah, so if you missed the Rivian episode yesterday, you are now allowed to go ahead and watch that if you haven't already. Don't forget to like, comment, and subscribe. We appreciate you for listening, and we will catch you next week.
Sounds good.